Welcome. It's Epstein, and here we are with your Spider ETF stock market wrap-up for this Tuesday night, fight night. Yep, it's fight night. Okay, I wish I could say showtime, but it's not showtime. But it's fight night, and it is September 10th, 2024. And for those of you that don't know what fight night is, debate night, first time between Kamala Harris, Donald Trump. All right, and we will see which one can withstand the punches from the other, who gets goaded into making the wrong moves, and how does this come out? Because this debate could be the knockout punch. All right, we saw it happen with Biden. We don't know too much about Ms. Harris. She rarely does a lot of interviews. That, at least I haven't seen her on a lot of TV in 4 years, up until she's decided to run. And we see too much of Donald Trump all the time, and we know that he's got to get away from being Donald Trump to deliver something here. Can he do it? We'll find out. What about the markets? All right, let's talk a little bit about tomorrow. We're going to get the Mortgage Bankers Association, besides who we think won in the debate tonight. We're going to get that. We're going to get the August Consumer Price Index. Today we saw more declines in the API numbers. We're going to get the EIA numbers in the morning at, I think, 9:30. We get those, and we'll see what they look like. Food prices. This chart to me had me laughing today, because I want you to look at how things are falling right now. Now, they didn't do this until we're getting by the presidential election. Yes, they did back here make a top, and we knew this was COVID-driven, as supplies, trucking wasn't moving. You know, we had all those problems. But I'm always amazed how this goes down just as we get into these things, and I'm sure it has nothing to do with politics. I'm sure the interest rate break right now, nothing at all to do with politics. Okay, you can believe all you want. Now, as you know, we had some charting issues. They're all fixed now, so we're back to normal on things. And as you can see, you know, it's the old characters doing what they do. Tesla still acting pretty good up here and holding over 200 is what you can say. We're not able to get much away from $5 in AMC. We'll be looking at all the charts. So let's go to them and let them do the talking. I'm finishing up this week with BND. You can start writing me now for charts that you would like me to follow. All right, and if I choose yours, I try to offer a free subscription to one of my services. So start writing. I'll look to see what they are. Don't give me triple ETFs and doubles and all that. Not interested in that, all right? I want stuff most people follow in the marketplace, maybe that I haven't covered recently. Remember, there's thousands of interesting charts out there. I've been covering the main ones. But as you can see, you're making new highs on this whole move. And as you make new highs, this is an inversion market. The higher it goes, the lower real rates are going. And that is exactly what's going on. You've got higher lows, higher highs, as you can see. The market, you just got another crossover, by the way, back and forth here, where the 100-week average got over the 200. The 18's over both. That's another bullish setup. And the resistance, that's what you're fighting right now, the upper Bollinger Band. Now, what Bollinger Bands do as an algorithm is they adjust the market price, and the theory is the market will stay within them 95% of the time. When they narrow in dramatically is when the market, if you get a narrowing in here, is when the market latches on. And sometimes day after day it starts hitting that upper band. When it does that, I term that the gorilla glue trade, after that famous glue that is so strong. And via that glue, when the market does it, what it often does is it causes the slow stochastic study that often is overbought as you're up there to start embedding. Now, you need to get these markets lining up to embed. They have to be over each other at least 3 sessions in a row. You don't have it. They're just overbought at this point. In Rivian, I know for the longest time I've said to you, I'd like to see the market get into the combination of the 100 and the Bollinger Band. I don't know if it's going to hit it, but it's getting darn close. 1281 is a nickel away from the 1276 level, and you're oversold. Do I think there's a lot of downside? The answer is no. but it's got to prove itself. So I think it's gotten nice. And one of the things I'm going to look at, and I know you may not, you're going to try to buy it there. I want to buy it if it comes out of this sideways action. I want to buy it when the momentum turns. I want it to be a momentum trade to the upside. But I'm looking here, this is where I think it's going to run out of the downside. When the CrowdStrike was up here, I said, this big break, you had a correction, you often come down and break again. It's exactly what I said on the last videos, and that's what you're doing. But here too, you're developing this sideways action. If you don't break out of this much more to the downside, here too, I'll be looking at a market that over time can start developing into a bigger trade to the upside over time. We're not there quite yet. Uranium, I am still bearish on. I mean, the market just can't hold rallies. You get these feeble attempts, and every time it just fails and makes new lows. So until it's over, it ain't over. That's the way to look at it. In Dell, this reminds me of CrowdStrike. It's starting to form that sideways action. We'll see what it can do with that. So I'm seeing setups where I wouldn't mind these markets lollydolling through September, going nowhere, and give me something to hang my hat on as we get later into October. Why? Because September is often a terrible month for stocks. That does not mean it has to be, but it's got a history of that. It's also the time where corporations start floating debt like there's no tomorrow, because now that interest rates have come down so much, they don't want this to get away from them. They're not quite certain what to expect, but they're a point, in many cases, lower than where they could have floated it just 6 months ago. They got to be thrilled. And of course, commercial real estate people are fairly happy. When we look at homes, you've had a correction as you've come down into the 18-day average. The market's got to prove that it's got something. This is kept. It's bullish bias, but it's got no pizzazz to the upside. That's what it's missing. The home builder's a little different. They've got the lower highs, lower lows, and they've spent a lot of time under the 18-day average. So the bias is down, the trend is down, but you're oversold as can be. I teach that when you're oversold, you don't deploy new money in a chart. That doesn't mean you can't, but I wouldn't have my clients do that. And I'm talking my subscribers to my services. Lower highs, lower lows coming down here. You can get to the 43.28 level. So the financial services, if you're watching, you're seeing the bank stocks getting smashed right now. They're concerned that going forward, they're looking at loans they have, people having trouble paying on them, credit card debt soaring, auto loans that now almost 10% are not paying on them. I showed these numbers the other night when I was doing the 2 videos that I was able to get out there. Be careful. You could be going to 43.28 in this market. To negate the downtrend, you've got to get back up and over Monday's high. And I don't know that that's going to be easy right here. In XLI, the industrials, well, the market had this whole rally based on interest rates falling. And like all of you, and you being the general public, not necessarily you, got to be careful what you wish for. The reason interest rates are falling is because things are slowing down. Be careful. And you've noticed that since this has been happening, suddenly the market's been coming down. At some point, though, these low rates, lower commodity prices, just look at the price of copper, look at the price of food that I just showed you. It's one thing after the other will come to roost, and maybe this gets some industry going here. But the Fed hasn't even begun their part. The marketplace is already taken interest rates down. The Fed hasn't. It's their actions after the fact. So are they behind the curve? In the sense that I just said, they most certainly are. When we look at the energy sector, it just keeps coming down. Now, today the Energy Information Administration came out, and they are looking for prices to be higher in the fourth quarter than this. OPEC has lowered their prices and their targets right now for the fourth quarter, so everybody's fighting for where you're at. But what I know is there's a glut at this point in time. You've got China in a terrible malaise, and it's going to get worse when the tariffs kick in on October 1st. You're getting a lot of front-end buying coming out of China, and that's why their exports surged, in my opinion. Now we'll see what happens. And by the way, they're doing more exports but less dollar volume because prices keep falling. It's very interesting. When we look at the gold market, look how you're narrowing in. This is the reason, and it looks this way on futures too to a degree, why I still think that gold this year could be a target market for 2,600. But obviously I'm wrong. If you get under all this, we'll see what it does. Silver market is still a market that's been coming down, but it's starting to act a little better on a chart picture. It's oversold. I don't think it's getting much under here, the 25, 26, if industry's going to pick up. If industry doesn't pick up, copper's going lower then, and you can see how it's come down. Silver's going lower because metals used in industry won't go anywhere. You need to see that turn in Europe, and you need to see that turn in America. And obviously the elephant in the room, China, and their industry's humming. Are they making money? I don't know. In TLT, this is the Gorilla Glue trade. You've latched on now every day to the upper band, and now you're starting to pull the slow stochastic, and if you embed, you can get to even higher levels here. So this is going to be the trick right now. In the dollar, you're instantly overbought with a rally. You might go to the 200-day average, but be careful about deploying new money in that market because you're overbought. The flip-flop is happening in the euro. You can see that right through there, and you're already oversold. Now, one of the ways that I often come into markets like we've got right now is I use a technique that is called pivot points. It was taught to me many years ago by Larry Williams. I'm sure many of you know who he is. Great chartist, fabulous books. You should read them. I keep up with what Larry does. And you can see how this market is just right through here. Now, I want to come back to that chart for a reason. I'll show you what the pivot point actually looks like, and I want to stop at it. And here we go. You have this formula in your charting software already. But a pivot will be your center line in white, and then you get what's called resistance 1, 2, support 1 and 2. I always called it sale 1, sale 2, buy 1, buy 2. It was much easier for me to do that. And what I don't, a lot of traders use this as a day trade tool, and they swear by it. All right, I run into people all the time that love pivot points. I find that I like to use it for spots that I'm looking to be a buyer or seller more in a position point, and I'm looking for the market to pull back. Most people use a 15-minute chart with this, and you're looking intraday to try to find points, but I tie with it slow stochastics. And I find that that combination has added a little bit more to it and gives me a better idea of what the market might do. Once again, you got to learn it in order to be able to use it, and how you use it, you can then play with. We offer this course for free because we want to teach you how we teach other things. You simply go to our website. It's a video course. We'll be sending you links and everything to get into it. You go to Epstein.com, free offers. If you have questions, call my staff. I'll catch up with you all in the morning as we try to discuss just how did the debate go. Whoa. And of course, we'll talk about CPI. Take care.